Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
702.
The Clement Manyathela Show.
Let's walk the talk.
25 minutes before 11 o'clock, we're having a conversation now about climate change and climate change funding and, how central this issue can be even at the G20 as we prepared to host that. And this B20 in brief is brought to you by Standard Bank, your weekly window into the key insights and conversations that are shaping the B20 summit. So, according to the latest State of the Climate in Africa 2024 report by the World Meteorological Organization, Africa continues to bear the brunt of climate change, facing mounting costs that could reach up to 5% of the continent's GDP, with some nations already spending nearly 9% of their annual budget on climate-related disasters. It's quite clear that adaptation and resilience need to be top priorities for both the public and the private sector. So as South Africa prepares to host the 2025 G20 summit, it's actually the first ever on the African soil, right? And the B20, by the way, is the official business sector engagement group for the G20. So as we prepare to host that, it's important for us to look at issues like climate change and other challenges. So joining us to unpack this growing challenge is Sasha Cook, who is the head of sustainable finance at Standard Bank Group, joining us on the line. Sasha, thank you so much for making time. Good morning.
Good morning, Clement. Thank you very much for having me.
Let's start with your assessment as Standard Bank. Like, how do you assess the pace of climate adaptation around the world? Where are we?
So, I think when we talk about climate adaptation, Clement, to be honest, we still get a couple of glazed looks. So it might be worth starting with a brief, covering of what do we mean by climate adaptation. So when we're talking about climate adaptation, we are talking about investments in projects that actually reduce the vulnerability to the impact of climate change. And that's slightly distinct from climate mitigation, where we are talking about projects that actually slow down the potential for climate change impact, things like reducing emissions, etc. So when we're talking about adaptation and resilience, examples could include climate smart agriculture. So things like crop varieties, more drought-resistant crops, or water management techniques like using drip irrigation, which actually delivers water directly to plant roots and thereby minimizes water waste. Infrastructure is such a key theme that directly aligns with adaptation and resilience, and infrastructure in its multiple senses. So if we use transportation infrastructure as an example, transportation infrastructure actually is one of the infrastructure categories that is the most highly exposed to extreme climate risks. So projects that ensure that our roads, that our rail, that our bridges are better able to withstand things like extreme heat, flooding, etc. The last example I want to touch on is actually quite interesting, and it covers nature-based solutions. So here we are talking about restoring our natural ecosystems, in fact. So things like for coastal regions, restoring wetlands and mangroves. And by doing that, you actually provide a natural protection or an inbuilt resilience against the impact of storms, erosion, etc. And quite often, it's very interesting. If you look at these adaptation and resilience projects, not only is there a positive climate adaptation piece, but very often there are multiple socio-economic benefits, things like local job creation, better community resilience, etc. So really a very important topic. And to go back to your original question, you asked me for my views on the pace of climate adaptation. Without a doubt, the pace is too slow. The United Nations published a report called the Adaptation Gap Report. So if you look at the 2024 report, it does talk about the fact that adaptation finance is increasing year on year, which is positive, right? However, it still lags behind the rapidly increasing costs. I mean, you mentioned some quite alarming metrics, 5% of GDP, 9% of budget spend. This report, the 2024 report, talks about an increasing financing gap for climate adaptation and resilience that is estimated to be between $200 and $350 billion per annum. Those are staggering numbers.
Yeah, they are quite staggering numbers. So this is obviously going to require the partnership and the involvement of not just the private sector, but the public sector as well. How does this adaptation fit into Standard Bank Group's broader sustainability approach and commitments?
Yeah, so in a number of ways, in short, but let me take you through it a little bit more, in a little bit more detail, Clement. So the group has a positive impact strategy. It's a public strategy, and it identifies 4 key focus areas. Okay, just to touch on them briefly. The first being climate change mitigation and adaptation. So it is literally one of the core pillars of our positive impact strategy. The second focus area within that strategy is on infrastructure development. And as I've mentioned, adaptation and resilience is very integrated when you start thinking about infrastructure development. The third area is business growth and job creation. And the fourth is financial health and inclusion. So adaptation and resilience actually touches on all 4 impact areas. So it is fully aligned to our own positive impact strategy. And it's also aligned with the group's strategic priority to support addressing the infrastructure and energy gap across the continent. So the group has spoken at length about the fact that we support infrastructure development of renewable energy and access to energy. And all of these areas require adaptation and resilience to be integrated into the approach and the strategy. The other area where it really does align is with our sustainable finance strategy and our frameworks. And we've got a public target to mobilize more than 450 billion rand of sustainable finance by 2028. We've made very good progress, more than 40% achieved towards this target as at the end of December 2024, and further progress will be evident when we publish our interims imminently. And within that 450 billion rand target, there are a couple of key focus areas or sub-targets. So there are sub-targets focusing on green finance and social finance of 100 billion rand each by 2028. And a lot of those projects have got direct positive adaptation and resilience impact. The last area I just want to touch on, which is also a public target set by the group, is to finance more than 7 billion rand in climate smart agriculture by 2030. And as I've already touched on, climate smart agri is one of the key categories that feeds into driving positive adaptation and resilience impact.
So do you get a sense, though, that there is a coordinated approach to climate adaptation? And I wonder how big climate adaptation and resilience across forums, whether you talk about the recent 2025 SADC Sustainable Finance Forum or even the Group of 20 engagements, how big of a factor in a conversation is that?
Yeah, good question. So is there a coordinated approach, Clement? There's definitely increased focus and awareness, and that is quite tangible. And I would say that's probably in the last 6 to 12 months, you can see that this really is one of the top topics that is spoken about at these forums. On the coordination, I think more can be done. You mentioned right at the start that this really requires a coordinated approach between public sector and private sector, and you're 100% right. So countries are developing national adaptation plans. This really does help to prioritize and coordinate across sectors and across regions. And the NDCs, the nationally determined contributions, typically include both a mitigation and an adaptation component. So both of those are covered. But to be honest, more can be done. When you look at goals, whether they are global goals, whether they are national goals, very often the adaptation goals are not as clearly defined. They're not as clearly measurable and quantifiable as the mitigation goals. You know, when you're talking about mitigation at a national level or even at a corporate level, you can have specific targets like reducing emissions by 30% by 2030. When you're thinking about adaptation, how you define those goals becomes a lot more complex. So, you know, I would definitely say that more needs to be done to increase the coordination between the global adaptation goals, then going down to a national level, understanding the national goals and adaptation plans, and then actually what are the goals and strategies across local government, various sectors, and then right into the private sector, as you say. Maybe just to touch a little bit on some of the recent forums. You mentioned there was a SADC Sustainable Finance Forum held recently in Cape Town, and the G20, there was a side event actually specifically focused on adaptation and resilience. So definitely reiterating the point I made around a tangible increase in the level of interest, the level of awareness. And if I think of some of these recent events and forums, a couple of key messages. So, you know, again, the point around private sector and public sector coordination and participation is required to get this right. You know, in addition to having national adaptation plans, public sector needs to actually develop supportive policy and regulatory frameworks. And looking at it from a private sector point of view, a lot of the focus is on actually understanding or better understanding the physical risks that are faced. If we look at a bank, for example, what are the risks that we face or that our clients face or that we face in the assets that we hold as security through extreme weather events? And, you know, what came through in these discussions and conferences was quite interesting. So a lot of the modeling tools that are used by African institutions essentially are supported by developed world data. Now, to use like a simple example, if you're trying to predict with accuracy extreme weather events in Africa, does it make sense to be using European or developed world data? You know, so there's a need for improved data and localization of data. That came through very clearly, that adaptation plans are so localized and specific, regionally specific even. Yeah, so very, very interesting discussions. I mean, one of the last few points that came out from these conferences was this concept of, we've spoken about the increasing climate financing gap, but actually there's also a growing insurance gap. So if you think of the nature of extreme weather events, they make insurance more costly, right?
Yeah.
Therefore less affordable, particularly for those that actually need it. And so there's a need to address some of the insurance gap that is coming to the fore as well.
Yeah, I mean, I want to...
Things that came out.
Yeah, and I want us to look at, you know, what are the other ways we can start addressing issues like that financing gap, that insurance gap. What are the initiatives you probably think can be developed to build momentum on adaptation? We'll get into that after this break. It's 12 minutes before 11 o'clock.
Over the years, you've heard me ask Wealth Manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
You're with Clement Manyathela.
7:02. Let's walk the talk.
10 minutes before 11 o'clock, we're talking climate adaptation this morning on the Clement Manyathela Show with Sasha Cook, who's the head of sustainable finance at Standard Bank Group. And Sasha, you spoke before the break about the financing gap, the insurance gap, you know, some of the challenges around adaptation and how sometimes it's not quantifiable. So there seems to be some challenges when it comes to integrating adaptation and scaling adaptation finance. And I know among some of the newer thinking in addressing financing gaps are, you know, initiatives such as using revenue streams from carbon credits or from associated ecotourism to fund adaptation projects. What do you think are some of the initiatives that can be developed to build that momentum we need on adaptation?
Yeah, thanks, Clement. It's actually a very important point. You speak about some of the challenges. One of the key challenges when it comes to private sector participation and how we can help mobilize adaptation finance is the challenge that a number of these types of projects suffer from a lack of clear revenue streams or traditional revenue streams. So, if you think of the examples we spoke about previously, like conserving a coastal ecosystem or resurfacing roads, there's not a clear traditional revenue stream or additional revenue stream against which you can look to fund. Therefore, some of the points that you raised around, more innovative thinking or alternative revenue streams becomes critically important. And there's some quite interesting case studies we can touch on here that I hope will sort of demonstrate the point. We have concluded a couple of transactions with a company called the African Stove Company, where we actually financed against carbon credits. Now, what the African Stove Company does is they roll out or distribute clean cook stoves to rural communities in South Africa. Now, the impact of the rollout of these cook stoves is that the households that have moved from traditional open fire cooking methods to clean cook stoves would typically use about 60% less fuel, and that would be traditional wood or charcoal. This has the impact of significantly reducing carbon dioxide emissions. That, in turn, facilitates the generation of carbon credits, which are externally verified. Those carbon credits hold value. When they are sold, they actually generate an additional revenue stream. And banks like Standard Bank are able to fund against those additional revenue streams. So it just shows how there's some innovative thinking required around, looking at these projects, understanding what additional or newer revenue streams can actually be generated and how banks can therefore seek to fund against it. I mean, these projects the impact is significant, like I mentioned. Not only the positive environmental impact, but if you think of the social impact here as well, the reduction in air pollution, moving towards these clean cook stoves, it reduces air pollution by about 50%, which largely actually benefits the vulnerable groups, being women and children, which are the most exposed to air pollution. Another example I just want to touch on is a transaction where we funded a company called Wilderness Safaris. So the previous example looks at generating revenue from carbon credits. Where we funded against Wilderness, they are actually an ecotourism business. And their ecotourism revenues essentially fund their conservation efforts across 8 countries in Africa. And they've got a goal where they are looking to conserve 6 million acres of land across Africa. So we provided funding against these ecotourism revenues, linking the use of that funding to conservation efforts. We also actually partnered very recently. We partnered one of their largest subsidiaries in Botswana, Okavango Wilderness Safaris. And basically this partnership supports the SMMEs, so small, medium, and micro enterprises in Okavango Wilderness Safaris' supply chain, with a focus on providing financing and capacity building for local-owned entities, citizen-owned entities, women-owned, and youth-led entities. So you can see how these types of initiatives not only drive positive climate adaptation resilience benefits, but actually support the local communities and drive that socioeconomic benefit as well.
Yeah. What do you think can be the role of these multilateral bodies, like the G20, for instance? I wonder how we can use the G20 presidency and to use and leave a lasting legacy on climate adaptation. But there are many other multilateral bodies, COP30, SADC, the United Nations. We spoke about some of them. How can we use those to so that they play a critical role in driving this work that's related to climate adaptation? And we have a unique opportunity this year as we have this G20 presidency.
Yeah, absolutely, Clement. I mean, I really think it is a is an opportunity, as you say. So entities like these are absolutely critical on a number of fronts. Firstly, to drive the prioritization of adaptation and resilience, to really drive increased and enhanced coordination. We've touched on that a few times in this discussion now. It's such a key piece. And you know, organizations like this have the ability to drive coordination globally at a national level, regionally, and between and across the public and private sectors. And then really importantly is to facilitate capacity building. So there is a need for capacity building in newer areas like adaptation and resilience. And I think through all of that, there will be an ability to drive increased finance mobilization, which is essential and so desperately needed. So, yeah, I mean, you mentioned a couple of these organizations, but the COP30, which is going to be hosted later this year by Brazil, is expected to have a very strong focus on driving adaptation and building resilience as well. And I think like you mentioned, you've got the G20 really, which can drive knowledge sharing, finance mobilization, increased international cooperation, and then at a regional or local level, entities like SADC are critical, in ensuring the regional coordination, focusing on regional priorities. And I'm going to raise it again, like I say, adaptation is very localized, and so priorities are going to differ region by region, country by country.
Sasha, I think we've learned so much about climate adaptation. Thank you so much for making time for us. Sasha Cook is the head of sustainable finance at Standard Bank Group.